If you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels. Internet went exponential from 1996. So it's still the earliest days. When I started on Wall Street in the 90s, that's also what I heard on Wall Street. I remember our economists and our bond heads of fixed income saying the US is on an unsustainable path for debt, and that was 35 years ago. So for the next 35 years, you're going to hear the same thing. The US is on an unsustainable path of debt, yet it's probably not going to make a difference.
Bitcoin is still early in its journey, but that won't last much longer. That's the latest insight from Tom Lee, co-founder and head of research at Fundstrat. Data from Glassnode shows growing active addresses and increasing long-term holder supply, signaling that solid adoption is quietly building beneath the surface. Meanwhile, spot Bitcoin ETFs are pulling in billions in net inflows, confirming that institutional capital is finally entering the market at scale. Yet despite all this infrastructure, access, and rising demand, most investors remain on the sidelines, either unaware or unconvinced, meaning the broader market hasn't fully priced in what's coming. That's why Tom Lee believes now is the prime time to invest. With steady adoption gains and global macro conditions shaping the economy, he sees Bitcoin positioned for a major repricing within this cycle. The window is open, but if you wait too long, you might miss it. Stick around until the end of the video as Lee shares his full market assessment, breaking down current sentiment and his outlook for the rest of the year and into 2026.
Your overall assessment of the market, where we are, and how do you anticipate the market in the second half and 2026?
Well, the stock market in 2025 faced a black swan because Tariff Liberation Day was a shock, and it created a downward spiral in stocks, falling 20% in the fastest pace, or one of the fastest pace in 100 years. There have only been 12 times in history that stocks fell a similar amount and a similar speed. And I think the mistake many people made was that shock turned people bearish. As you mentioned, we did think there would be a correction this year, but the reason I think we didn't turn bearish, even though this was a huge decline, is three things. One, we didn't expect President Trump to stick with the tariff terms. So even though in the beginning they claimed this was the deal and everyone had to take it, we thought they would eventually walk back those terms, which is what's happened. And in fact, what we've seen so far is the tariffs are much, much milder than many people thought at the start of the year. So we're actually in a better place. The second is many economists convinced you that there'd be a recession. Do you remember all these economists said a recession's guaranteed, and that's why everybody panicked and sold their stocks. But we don't necessarily listen to economists. We prefer to watch what the high yield market is doing. And the high yield market, while it showed some turbulence, actually moved in a way that said there might be a growth scare. So there's a difference between a growth scare and a recession. A growth scare just means everybody gets cautious, which is understandable. And the third reason we didn't turn bearish is that waterfall declines, like we saw, usually come back as a V-shaped recovery. And that was our argument, that this would be a V-shaped bounce. And in fact, we were pretty convinced of it because the VIX, which is a measure of volatility, jumped to 60. And if you look at the last 35 years, anytime the VIX has moved above 60, no matter what you think, you have to buy the stock market because that's pure terror. The market is so scared, they're not pricing anything, and that's why you have to buy that. And so stocks had a V-shaped bounce. And now that we're almost back to the old highs, I'm finding a lot of people are still bearish. Maybe in the audience, you guys are still bearish, thinking, I don't see why stocks came back, so I don't really want to buy the stock market now. But here's something to keep in mind. In 2025, we've already had a 20% decline. The chances of a 10% decline between now and year end is very low. It might even be statistically 0%. So maybe the stock market could trade sideways for a little bit, but the chances of us declining again are very low. Fed is not cutting rates right now. And Fed Chair Powell said he's not cutting interest rates because he's expecting inflation to rise over the summer because of tariffs. That might kind of make sense. I mean, I'd say if someone said that to me, I'd say I understand that prices should be going up because of tariffs. But that is not actually how monetary policy should be administered. The Fed is really supposed to overlook supply shocks. So if you have a supply shock, like a tax, and it causes a one-time rise in price, the central bank is not supposed to adjust monetary policy for that, because the Fed is trying to control demand, meaning if there's so much demand for something that it causes prices to go up, they try to tighten monetary policy. But because of tariffs is more like a supply shock, the Fed should actually look through it. The bond market is starting to make that conclusion. On Wednesday's FOMC meeting, the bond market disagreed with the Fed. Interest rates actually went down in the last couple of days because they don't believe the Fed should be on hold. And that's also been our argument, that the Fed, if they're not cutting now, they have to do more cuts next year. Maybe more importantly, most people think stock rallies are only because the Fed is easing, adding liquidity. That's why in the April lows, people were saying the stock market couldn't rebound because the Fed wasn't going to add liquidity. But guess what? We had a V-shaped bounce anyways. And so it shows you the central bank isn't needed for stocks to rally, but next year we think they're going to cut a lot, and that should support stocks. And as far as positioning goes, I don't think you really explained our view on sectors this year. At the start of this year, our top calls were industrials, financials, and tech. That was first, second, and third. Year to date, industrials, financials are outperforming the market, and tech is actually beginning to outperform. So that's really been our stance this year. But with the Fed cutting rates next year, I think that's going to be good for interest sensitive. So that should really support financials, and it should support small and mid caps.
Despite earlier fears about tariffs, inflation, and Fed tightening, the U.S. stock market has remained resilient. Tom Lee believes we're now entering a more favorable phase, where easing financial conditions and a potential Fed policy shift in 2026 could boost both equities and crypto markets. Beyond these short-term cycles, Lee also tackles a long-standing investor concern: U.S. debt and the future of the dollar. Warnings about unsustainable deficits, borrowing, and a looming tipping point have circulated for decades. Yet, the U.S. continues to dominate capital markets, innovation, and corporate power. 21 of the world's 25 largest companies are U.S.-based. The dollar remains the dominant global trade currency, not because it's flawless, but because there's no serious alternative. Yet, however, that could be changing. Analysts and Bitcoin advocates like Samson Mow, Jack Mallers, and Michael Saylor argue that the very cracks in the current system are what make Bitcoin so attractive. With its fixed supply, global accessibility, and resistance to monetary manipulation, Bitcoin is increasingly seen as a potential alternative to the dollar. As more institutions, countries, and individuals question the long-term viability of fiat currencies, do you think Bitcoin could truly challenge the dollar? Let me know your thoughts in the comments.
So as long as the US is the most liquid economy in the world, we're going to print a lot of dollars and interest rates are going to stay low. And the second is that as much as you hear stories that say the US is losing its importance, so the rest of the world is becoming more dominant, and that's why the US is in trouble. One, again, I've heard that story for 35 years. Everyone's told me the US exceptionalism has been over. and it yet has never ended. If you look at the 25 largest companies in the world, 21 of the 25 largest are in America. So just because US borrowing costs might change, is Germany going to suddenly be the place where the next Mag 7 comes? Like, just because borrowing costs change in the US, will Germany suddenly be the next Silicon Valley? I mean, if you believe that, then you should bet against the US. I'm very skeptical of that. So I think you shouldn't make a portfolio decision thinking stocks are going to fall because someone told you the US can't fund its deficit.
You did mention that you were one of the first on Wall Street to make a call on Bitcoin, but do you agree that Bitcoin, Ethereum, these cryptocurrencies will continue to do very well for the next couple of years?
Yeah, I mean, I think Bitcoin is, if you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels. Internet went exponential from 1996. So it's still the earliest days. I think Bitcoin is very useful because in the future, we're not going to be able to trust anything because cybersecurity, there's nothing secure anymore. We can sample your voice. I mean, even someone takes our voice, translates into Korean using my voice, you'll never know what's true anymore. So you need to be able to trust a system. The blockchain, the Bitcoin blockchain is the most trusted blockchain. And that's why the United States wants to have 1 million Bitcoin. US companies are buying Bitcoin. Banks will soon carry Bitcoin as collateral. But Ethereum is really important too. Did any of you buy the Circle IPO or own Circle? Circle is a stablecoin, and they just went public 10 days ago at $31. It's now $242.
What is the ticker code?
CRCL.
CLCL.
Circle is a stablecoin. It's the second largest. Stablecoins are being pushed by the United States government. Here's the thing. Circle runs on Ethereum. Stablecoins run on Ethereum. So as stablecoins explode, Ethereum is the backbone for stablecoins. So I think Ethereum is going to make a big comeback as well. So I think those two are useful. And then Solana I like, but it's not nearly as used as Ethereum.
Bitcoin briefly surpassed $111,000 in May but hasn't yet maintained a position above the $100,000 level. Tom Lee suggests part of this slowdown may be due to early investors cashing out. Some who bought in around $100 are ready to sell regardless of whether Bitcoin eventually hits $1 million. Despite Bitcoin's price plateau, the broader crypto ecosystem is gaining momentum rapidly. Coinbase, for example, surged 40% in June fueled by optimism around stablecoins, the Genius Act, and the Circle IPO, which helped restore faith in crypto infrastructure. For long-term holders, staking has become a key strategy. While Ethereum and Solana prices may be stagnant, staking these assets allows investors to earn income while holding. Major institutions like BlackRock and platforms such as Robinhood are already embracing staking services, signaling strong growth potential in this area. At the same time, crypto ETFs are attracting substantial inflows as fee waivers and easier access draw in both retail and professional investors. With growing ETF adoption and attractive staking yields, Tom Lee's original thesis remains intact. Crypto's best days might not be behind us, they could be just beginning. For those still watching from the sidelines, this might not be a market top, but rather a fresh start. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.